Friends, in this video for ithought Advisor, I'm going to talk to you on the topic 22-23, what to expect. A new financial year is about to begin. It's time to set our expectations for that financial year. Over the past few years, no year has resembled the previous one. The next one has always been a surprise. Who would have thought that 21-22 would have been what it turned out to be? We may have begun years on optimism and ended on a note of despair. Some years begin with no idea of where we are going and then gradually take direction. Some years look very challenging and progressively improve. So what kind of a financial year are we heading towards? Firstly, we are going to see a financial year very different from the recent times. The one thing that will differentiate the coming financial year from several recent years will be inflation. Inflation is going to be the one thing that will affect our investing more than in recent years. We'll have to ensure that our portfolios have the resilience to tide over inflationary times. It's obvious that even countries which have been protected or insulated from inflation in the past are not going to remain so in the coming financial year. Everybody recognizes this. Central bankers are openly talking about it. We all are bracing up for rising interest rates. We are bracing up for lower savings and we are getting ready for a higher cost of living. All this means that investing is also bound to change. It has to move with inflation. It has to stay with the times. So we need to adapt. In an inflationary year, should you expect returns to be higher than its previous year? The answer is quite obvious. We have to lower our return expectations. We have to even be prepared not to earn anything. We should, in extreme conditions, be ready for negative returns. So, should we shun investing in such a year? Should we just stay away from taking risks? The answer is no. The reason is fairly obvious because when you see difficult times, when you see inflation adjusting upward and affecting businesses, you are bound to see a contraction or a reduction in the valuation of companies. Now, this reduction will gradually gain momentum and will be very sharp as inflation tends to affect more than we anticipated. So, with every passing month, with every quarter that goes by, we are going to see this factor affect the valuation of our portfolio more. That is going to be what 22-23 will look like. So, when you know it's going to be like this, you have to prepare yourself well in advance to use that inflationary phase and invest in businesses which will come out of this successfully and then ride its way to a higher valuation plane. Obviously, it's not easy. Whatever worked in the past will probably not work immediately in the future. We could see a different set of businesses coming into the limelight and taking benefits of the changing inflationary environment. We are going to see the businesses with better pricing power and strong resilience in demand do better than other businesses. So, the whole investment climate will gradually turn. We are going to see a year where opportunities are in a different place from where they were in the previous one. The COVID trades are all going to be put behind and we are going to see a recovery trade or a revival trade in every economy. It's not going to be easy from a flows point of view. Flows have already anticipated the coming year and we have seen nearly 2,75,000 crores going out of India into the pockets of FIIs. So FIIs have been selling continuously. We have to see for how long they will sell, how the intensity of selling will gradually moderate and how the selling will be turning into buying over a period of time. So all this has to happen through the coming financial year. In that sense, it's going to be quite volatile, a roller coaster of sorts when people change direction and go towards a new direction, taking with themselves the opportunities which will do well into the future. So the past and the future are going to travel in different directions from here, and it's important that we take the direction which goes into the future, and we should not go back into the past and get ourselves lost. So investment is going to be different. It has to be very differentiated from others, and you need to invest in a way which helps you defeat inflation. Thank you for watching this video.